I cannot emphasize to people how just rough it was for oil markets. WTI crude lost 40% just from October 3rd through the end of the year. Is there any end in sight to the carnage in crude?
It's always obviously hard to tell, but you do have to question right now whether or not this is the darkest before the dawn, to be honest with you. And I say that because a couple of things have started to happen. One of the major factors that tipped over oil so harshly to the downside was a Russia production that got put on the market by Saudi Arabia, Russia, and of course this massive increase in U.S. production. Now, OPEC has circled the wagons, and so has Russia joined in. Over the course of 2017 to last October, oil prices steadily rose because they maintained a very strict production discipline. They were able to bring down global inventories to more normalized levels, hence the price went up. We're in that situation again. And not only are OPEC and Russia doing this, we've actually had a very large decrease in output in Canada, of all places. Steep drop in their rig count, some 60 rigs, almost a third of it. Incredible sort of reaction to the price collapse there. Even worse, the numbers up there are nothing to what we're seeing for WTI, like half, $26 area, let's call it. So they've reacted harshly. The other question you have to have, too, is now that the independent E&P companies in the U.S. greatly affected by this 40% price drop. There wasn't a whole lot of hedging in place. Unfortunately, the blue sky mentality got a hold of these guys again, and they didn't necessarily rush to hedge their forward production as much as they had in the last cycle when prices went up. So all of this could combine with some other factors to stabilize prices. So the level in Washington, the downside, Dom, $42. If it holds, we should trend higher as 2019 marches on, but we get below 42, it could be some more carnage. I would take a look here at a lot of different things, including crude oil itself, but some of the major integrated companies with dividend yields like 6–7%, you got to take a look.
We had talked about that on New Year's Eve, this idea that on a relative basis, companies like Chevron and ExxonMobil have held up relatively well compared to other parts of the oil patch. Let's talk about the U.S. side of things because you brought it up. Is there a number, an estimate in your mind that crude oil, WTI, needs to be at generally for the U.S. shale producers to be okay with what's happening? We know that the Permian has different break-evens than Eagle Ford, that has difference than the Bakken. I mean, but just generally, where does oil need to be at for the U.S. to be okay in this trade?
Well, I mean, to use a football analogy, we're sort of in the red zone here. I think some of them are starting to be in trouble now. When you talk about, like you just said, production costs, wellhead costs, you add everything in. They really need about $50 a barrel, arguably, again, to your point, on a general basis. Now we're below that. We get into the 30s, it starts to get really problematic. If we were to somehow get back down to the 2016 low of $26 a barrel, there'll be a rash of bankruptcies again. There'll be another mass reorganization within the industry. It'll be a tough sled. I'll tell you, I was looking at this over the weekend. There are folks out there, technical analysts, who will tell you can chart anything, any data series. Well, the U.S. production levels have gone parabolic to the upside. And that screams, on a technical basis, for a retracement back down, at least to some level. We've gained over 2 million barrels a day in production year on year at this point. It's a lot. I'm not sure it's sustainable. And like I said, it wasn't hedged out to any great degree in the futures market. So a lot of issues facing the industry here for this 2019 period.
John Kilduff.
I think we can go back up price-wise.